Hello guys, welcome to today's edition of Bull versus Bears, the spread betting morning update. My name is Alejandro Zambrano, and I'm doing this presentation live from London. All right, let's just get going here. Today we're doing a shorter version because we're using the main channel to cover UK Consumer Price Index. And the outcome for UK Consumer Price Index was actually substantially higher than expected. We actually had a year-to-year growth of 1.9% versus an expected outcome of 1.6. So this is obviously something that kind of raises the likelihood of rate increases by the central bank of the UK. And this actually pushed price higher here, as we can see, we pushed up higher, and for now, we have increased with about 61 pip as we got that report. And what can we say here about the future? Well, obviously, it's a good macro fundamental report, and this pushes things up higher here, 71.50. But as we can see here on the daily chart, we're again reaching resistance. Tomorrow, we do have unemployment change in the UK, and Mark Carney is also going to speak later on today at it should be 10 a.m. London time. So there's a lot of things that can happen. This by itself, the consumer price index being higher, is obviously something that is probably going to be talked about more by the Bank of England as inflation is higher than expected. Uh, from a purely trading perspective, I wouldn't necessarily, I would definitely not go long now. We have an opportunity on the break here of this level, this little scalp uh, posted early today that it said it was pretty much trapped between this level and this level, and you can always trade the break from pivot point up to the R1 level, and that is it pretty much. I personally don't think this is going to change things in a big way, and if it does, we that opportunity is already gone. And then we have the data coming out tomorrow, and Mark Carney speaking, and also retail sales on today. So my gut feeling tells me that we're probably gonna be pretty much gonna stay somewhere here. I truly doubt they'll trade much higher than 71.70, even if this number is good. Um, this is resistance on the 30-minute time frame, which is also the same levels here. I personally think that we're probably gonna drift back down lower here, and it wouldn't surprise me a bit if we reach, say, 71 level. If you're happy to trade on the bigger time frame, not necessarily right now because it's not prudent to go short given the news. We can still get more of a short squeeze, people actually getting stopped out here. But I would say if we kind of don't trade too much higher than 71, 50, then I think actually we're going to move down lower here again. So I'm actually bearish from current levels, pretty much looking to risk about 32 pip, looking to make about 41 on the move back down here. But I will wait a bit here and at least an hour or if not more. What we need here is later on today is U.S. consumer, not U.S. retail sales, and Janet Yellen actually pushing this down lower here. So I personally think we're going to be contained into this range. The number is important, so we don't want to go short just yet. But later on in the session, if we see that people are not really adding more longs here, we don't get that short squeeze, I think we're probably going to drift back down to 71, to be honest with you. And then we'll see there if we want to go long or not. But right now, bearish under 71.72. Euro is pretty much trapped here. It is lower, and it is lower mostly due to pound gaining against the euro. It's not so much about the dollar being weak, sorry, dollar being stronger. It's more about the euro pound relationship here. We're trapped between 135.80 and 136.53. Very straightforward. Look for a break. When we get that break, you might get an opportunity to trade. Right now, there's really nothing moving here. Something that can give us a trend, a break, maybe later today is Janet Yellen and retail sales, which is going to be published. If that break happens, we can trade this. Not necessarily when that actually happens, but most likely the day after. There's a big problem overall right now with the markets is that we don't have any super strong trends. We don't have nothing really to trade, to be honest with you. The fact that the euro is lower and the pound is higher, again, kind of says that trade euro pound, don't trade necessarily euro dollar or pound dollar. Just because they're doing two different things, the likelihood that you're going to be right is quite low, to be honest. it's not good when they do two separate things. Next market we're going to look at is the Aussie dollar. So over now we got the minutes from the Australian Central Bank. Really no major change at all compared with previously. So that's pretty much what I've been saying. There's really no necessity to raise interest rates right now. Probably will not be any reason for this to happen anytime soon. If it does happen, it's probably going to happen, I don't know, early next year or something like that. I personally don't think nothing's going to happen here. To see things moving up higher, you need to see China doing substantially better, which they are bound or they are more or less doing to some extent. But then you have the weakness in the eurozone. Now, there's a lot of things going on right now, which makes me think that obviously it's going to be interesting, but right now there's not someone trading on this. From a purely trading perspective as well, pretty much supported by 93.25. It's the same setup as talked about yesterday. Anyone that has 1 week's horizon or so, be happy to trade this. Or otherwise it's really boring. Yesterday we trapped between 94 and 93.70. That's 30 pip range here. So it's really nothing I would strongly work with. Overall, you can maybe look to buy close to, where we are right now, 93.50, risk about 25 pip. You hold this for a few days, up to a week, to 94.50. Very, very simple. Buy at the lows, sell at the highs. Next market we're going to look at is the dollar versus the Japanese yen. And dollar versus Japanese yen yesterday, we said this is probably going to move up higher. We said the same thing on Friday. It did play out fine. We did reach all the targets, more or less. Right now, we're drifting lower. I'm happy to go long on a breakup at 101.68. Why? Because this is a breakout in line with the trend. It's also a breakout above the R1. Usually when that happens, we go to R2. And this is the pivot point indicator, and this is a 1 hour time frame. Until that happens, to be honest with you, I think we're going to probably try to drift lower to 101.40 as the price goes from being slightly overbought to neutral levels. This is something though I would not trade. I only like the breakout about 101.68. Next market we're focusing on, I'm going to focus on is the FTSE. And FTSE is, we had that little break yesterday, moved up a bit. I still think we can trade up to 168. Short term, this is what we're looking at. You have a nice little go to the upside here. Not really that impressive, to be honest with you. However, if we trade above the high of today, which is the 67.63 level, more or less, this is on the sell price. Let me change this to the buy price. Well, pretty much the same levels. If we get that break, I think it probably is going to be worthwhile doing something like this, and you can aim for 6,800, which has been the target for the last 24 hours. I think that is reasonable. If not, I think we can move down lower, but I wouldn't necessarily go long here. You can if you want to, but I would personally not do that. I do like the break. I think we might actually slip. It's a 50-50 situation, but I think we might actually slip a bit lower and under this level, try to reach 6,700. And from that zone here, I think it's going to be quite straightforward. Looking to buy here, put stop here, risk 40 pip, you make 100 on the way up to 6,800. Next market is gold. Now gold, the idea yesterday was actually quite straightforward, right? The idea was if we can stay above the lows, then we're probably going to, if we're going to stay above the lows, we can probably trade higher. And we didn't stay above the low, so we didn't really get that. Instead, we're right now just trading sideways, obviously from overbought conditions. I would say we probably will try to correct some of this. If I would just pull a Fibonacci, we get the different levels, and most likely people are going to try to go short here and look for a move to the downside, to be honest with you. Let me just take a look at the 30-minute. 30 minutes is not really that extremely encouraging, is it? There's really not too much going on here right now. Looking at this, we have taken out this level here. We will most likely try to reach higher levels, maybe something like 13.15, 13.20. Have some bullish momentum as long as trade above this level here, which is the 13. 1305 level more or less. So this is probably going to be the bias for today, slowly higher and higher. We are, however, trading as a trend. It's really not too much to do right now with this. It's up to you if you want to work with this. But again, we took out this little level. But you can see the candles here is really hesitating. And to be honest, it hasn't really made up its mind, has it? It doesn't have a strong conviction. It doesn't have a strong candle. So here, very straightforward, bullish above that level. And we can actually gonna flip to bearish here if it trades lower. Let me just add these levels here. So these are the pivot point levels. This is actually very straightforward. Break under 1305, you want to see a bit of a bigger candle. I would just use this as an opportunity to go short. This is probably the best option here, to be honest with you, for this. So that is gold. So I think we can drift up higher. Uh, and if we take out 1305, then look for a move to the downside. And that is it pretty much. About the macro for today, Janet Yellen is going to speak later on today. She's not expected to care too much about inflation. She's probably going to say something in line with, well, I don't really know exactly what she's going to say, but she's probably going to disregard the higher inflation. Maybe they need more data, so more reports to know if this is going to be something critical or not. And then you also have the labor market improvements. Unemployment rate is actually doing very well in the US, but as with the UK, we don't really see an increase in wages, which means that the market is not really overheating in any way. And this is something probably that they would like to wait. That's probably the number one reason that even though we got strong non-farm payroll support, we still haven't seen any very, very strong action from the Federal Reserve. And that's probably why the market is right now not really buying the whole story that interest rates in the US are going to be substantially higher by the end of next year. So with this in mind, keep an eye on those factors. People do not expect Janet Yellen to do anything about this, but they'll say anything about this if she does hint about it. This is obviously something that can create a bit of volatility. And you also have retail sales coming up later on today. Okay, guys, thanks so much for joining in. I will be available on Twitter, but also on the forum, so don't be afraid. Do reach out if you have any questions. Thank you so much, and talk soon. Goodbye.